Bloomberg Audio Studios.
Podcasts, radio, news.
Single Best Idea on Apple Podcasts, on YouTube Podcasts as well. Thrilled with that. I'm late to the party. I got a briefing Friday from a senior guy at Westwood One, and it was just simply a podcast walkthrough. And I really didn't realize YouTube is really beginning to do well with podcast distribution. So good morning to that. I got to look that up. We'll have much more on that this busy week as well. Of course, the Fed on Wednesday. As I said last week, something changed in the air Thursday, and I've never seen the balance between 25 and 50 basis point, a quarter-point interest rate cut, a half-point interest rate cut, and the indecision, the uncertainty. And Dr. Wong, Anna Wong at Bloomberg, really led on this. I give her great credit. She had a bar chart out that was just completely unusual in the history of the Fed. So we got through the weekend, and we had the Wall Street Journal had an article, the FT had an article, this, that, and the other. And very clearly on a Monday morning, we had the bond market showing price up, yield down, and lower yields, particularly with the 2-year yield breaking down to a new low. And then at 6:30 New York time, to borrow the phrase, all hell broke loose. William Dudley, the former president of the New York Fed, writing for Bloomberg Opinion, put out a blistering note saying he supports a 50 basis point rate cut. Always on surveillance, we have the privilege of these guests. William Dudley, right now on 50 basis points.
I think what's essentially happened is the Fed changed expectations last week with those two articles that came out in the Wall Street Journal and the Financial Times, sort of suspicious articles, because they basically reopened the possibility of 50 when that was sort of getting closed off. Since that time, we haven't had any, Fed intervention in any way that's visible. So it seems at least that the Fed is comfortable with the shift in expectations away from 25 to 50. So I don't think, as time passes, I think what's going to happen is we're going to continue to price more in the direction of 50.
In a multiple meeting sense of 3 more meetings this year wrapped around the presidential election, they literally meet the day after with an announcement. The Fed decides 2 days after the November 5th election. Part of this, and with the analysis, of course, the analysis of Bloomberg is, how do I not lose money in the stock market? How do I buy bonds where price goes up, yield goes down? How do I buy foreign exchange? What do I play in the dollar? What does the litmus paper of the foreign exchange system mean? Paul Sweeney paying under $3 a gallon for his, it's not a Bentley. What's he have? I can't remember what car it is that Paul has. But anyways, the gas is coming down. Commodities are coming down. There's all this market swirl of the elites. Bill Dudley was iconic out of Berkeley at Goldman Sachs and with the New York Fed of always watching the broad spectrum of the American economy, maybe with that responsibility on the island of Manhattan of realizing it's not just about Manhattan. Bill Dudley on the Fed and the poor.
Well, I actually think the primary motivation for the interest rates cuts is the deterioration for the low and moderate income workers. If you sort of think about the consumer spending reports we've gotten recently, it's all about stress at the low end, and I think that's what's motivating the Fed to cut rates more quickly. So I think they're definitely taking that into consideration.
Bill Dudley there, I should say, singing from the same hymnal as Jerome Powell, that they look at all Americans. Finally, on this communication exercise, just some inside baseball. The Bank of England has visible dissent, acrimony, and good cheer, I should say, about dissent, argument, and that at the Fed, no one dissents. Well, Bowman dissented a number of meetings ago, but it was sort of kind of like dissent. Basically, nobody's dissented. You can't figure out what they're doing besides this idiotic analysis of the Fed speeches, the minutes, and that maybe Chairman Powell speaks like at Jackson Hole and clarity is assumed, or maybe there's smoke signals from selected media. Bill Dudley on the smoke signals.
This is sort of awkward. You really shouldn't be communicating through these sort of articles in such a subtle way that some people get it and some people don't. That doesn't seem to be very fair for people to get the right signal from the Fed. I think what basically happened was the issue of 25 versus 50 was getting sort of closed off as you approached the blackout period. Powell didn't want it to be closed off because he was actually thinking pretty strongly about 50 basis points. And this was the way to keep it open. And I think what's happened is people have reflected on it a bit more. The logic for 50 has become very compelling to people. And that's why I think that's what the Fed's going to do at this meeting this week.
Bill Dudley there, just a generous amount of time with us today after his market-moving essay for Bloomberg Opinion. We will go to Wednesday. The Fed decides. I look for our coverage. My people haven't even briefed me yet on who we have, but I'm sure it'll be just as good as what we had last time around. Great conversation wrapped around the announcement and then on to the press conference. And after the press conference, some good work. I hope Jeff Rosenberg of BlackRock shows up always as a after the press conference guest of what the bond market thinks of the Fed action. We're out at YouTube. Not only YouTube podcasts, but subscribe to Bloomberg Podcasts at YouTube. That's the best way to get us. On your commute, Android Auto, Apple CarPlay out there as well. And I should point out as well, across all of terrestrial radio across this nation, and particularly the corridor 99.1 in Washington, Bloomberg 1130 New York, 92.9 in Boston. On Apple Podcasts, on YouTube Podcasts. Single best idea.